Dum, 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 dum. All right. Okay, I'm back on the cannabis track. We're closing in on the 17th of October. That's when they're going to be legalizing cannabis in Canada. And I'm just going down through my list. And I want to see the leaders. So we have the theme. The theme is cannabis. It's CBD infused drinks, medical marijuana, recreational marijuana. Lots of catalysts, new market, unexplored revenue streams. We're gonna have news of people saying, we'll be doing this. People are gonna start leveraging Coca-Cola, whatever. Everything you've been hearing, and there's probably gonna be some more over 3 months, 6 months, and they're gonna keep giving us surprises of what they're gonna do with this, because this is like, I don't think we really grasp yet the amplitude of the legalization. Are they already discounting future maybe legalization in the United States, in other countries? I have no idea how far that's been discounted in the prices of these stocks that are involved in the cannabis. But all those clues, all those questions synthesized together through the actions of actual mutual fund holders and whatnots, well, you see it in the price action. And right now for OGI, before we do some Stan Weinstein on the Wheatley stage analysis, OGI on the Toronto Stock Exchange Venture, Organigram Holdings, healthcare, pharmaceuticals. We could go check those sectors in those industry, but every time I've been checking, they've been solid industries. You've seen the chart, guys. Low volatile, figuring its way out, getting some peaks. Oh, that went too far. See, back here. Oh, exponential, parabolic. And then whoosh, sellers come in, resets, time moves on. And what seemed, that's the mystery of the chart, guys. It's too high, it's worth too much, going to crash. Well, look at that. At candles, resets, sideways move. Less and less volatility, close to 12-month moving average. This time under, kind of dangerous. And then explode, volatility, explodes high. Oh, it went too high, can't go higher than that. Yeah, at this moment, yes, sellers came in. But after that, the sellers, buyers taking control here, bring it back up. And after that, it keeps going up and up, guys. And that's where we're at today. So we're kind of far. The ideal time would have been, you're close to 12-month moving average right here. And right now, you're just getting far away. So are we in another situation where we're going to have a pullback coming back close to 12-month moving average? And one day, this is just going to look like that. Look at that. See, it's all an illusion, guys. And remember all these stocks there that we see that have, let's say Apple, and say, I could have bought in 2000 for $2. Well, you don't know how high it's going to go, guys. You just don't know. It could go down to zero also. But the chart does influence your decision making. It used to do mine until I started fiddling around, playing with the chart, moving it around, just to make sure that, see the price action, up, sideways move, stairs, up, sideways move, up, sideways move. So right now, if somebody would enter here, I don't think you should expect it to go up. That wouldn't be healthy. What you actually want is maybe slide, pull back. Not to stress you out too much. Maybe close to the last breakout on the monthly candle right here. Maybe a pull back close to those levels. And after that, bounce off that previous resistance, turn support, what I call wall. Bounce off the 12-month moving average. And then continue up, guys. It repeats, right, the pattern, and then here you're going to have some resistance, right? Because if ever all these buyers here, if the price action goes back down, well, these guys, they might want to, they're probably maybe not happy. They have sell stops. They're losing patience. These are monthly candles. So that's going to create some overhead resistance. And after that, you might break out here. Launching pattern, sideways move, and so forth, guys. So on the monthly, definitely in stage 2. Maybe not the optimal time to buy. Maybe you want to wait for a pullback around the 550 levels. Maybe it's not going to get that low. Maybe 6th level, and increase your risk to reward ratios, guys, by having a stop that's protected by the 12-month moving average, protected by that support line right here. Okay, let's move on. Let's go to the weekly. Let's increase that chart size. So what is this beast up to? Remove all trend lines, all drawing tools. All right. Green outperforming the SPX, 30-moving average going upwards. Price action above the 30-moving average, and if it becomes gray, it's one of those three conditions is not met. Here you have a close below 30-moving average, not super duper, but the next week up. See, good low risk to reward ratio right here. You have the contracting volume. Oh, volatile. Pull back, what is it, 530 to 340, 50%. That's a big pullback, scary. Up, down, pull back, even less. Look at that, weekly candles, price action diminishing, contracting volume, supply drying up, and then after that, didn't need much, exploded on small, right here. Green volume starting up, exploding out, and same thing here. Another breakout, big volume. And usually after these breakout candles, guys, there's profit taking. Price action goes back down. If it's on small red volume, it's healthy. Back closer to 30-week moving average. See how it protects you. And after that, crescendo volume, green candles on this next move going up. And right now we're above weekly defined. It actually closed above. So you have a continuation move right here. Some volatility on the daily. We're going to zoom in. And we had this sideways pattern right here for the past 1, 2, 3, 4 past month on a green candle going upwards. But Pat, look, red candles. You told me it's danger. Well, let's go look. Because remember, it's red if the price action is just open, closes red. But this one I see is like a doji or I keep forgetting, spinning top indecision. Buyers went control up to here. Sellers brought it back down here. Buyers came back in and you closed right here. So let's see actually what happened here. So here's September 10th, the week of September 10th. We use the power of the zoom. So you zoom in on the smaller time frames to give you detail about what actually happened during that week, guys. September 10th started here. 11, 12, 13, 14, 15. Okay, right here. This is the week. As you can see, it went up on high. Most of that volume on that weekly candle was actually that Tuesday's volume where it really exploded up. And then it came down, but on contracting volume. Then went back up on green volume. Even gap down, went back up on green volume. But there's still, we could still get some more precision, guys. We could still see. I'm going to put the marker here. I want to see this candle right here. But you see the price action push all the way back up. We got a red candle because it barely closed negative. But this is when the buyers, sellers were all down there, but the buyer said, I want to close to the open. And it just happened to be red right here, hitting some resistance right there. Look, let's zoom in, guys. Let's get some more details. And what we have here is green on this big candle, red here, contracting. See, the volume went down a lot here, but on contracting volume, green bring back up. So most of the candles on up days, you want them to be green, and you want red candles on those lesser days. And here you see, look at that contracting volume here, ready to explode. So this is warning signs. But you have to take the context, the weight of evidence. Are you above the 30-week moving average? Are you above the 12-month moving average? But if you have a pullback, a huge pullback, a 50% pullback on heavy volume, it's some warning signs. But right now, you didn't have a pullback. It's heavy volume, but you didn't have a crazy candle like this. All right. And now the week closed on contract. See, when the volume dries up, you don't need much volume for it to move, guys. And that's what's happening right here. So we saw on the monthly, ideally, I think what we want. Pat, no, don't tell me to wait for the pullback. Well, yeah, let's wait for the pullback. So I guess you could enter here, sell stop below that wick, but you're kind of in the open here, guys. It's not super duper important support right here, or even lower here if you want. That's going to protect you. Ideally, you want to be here below that support line here, or even better, the investor's way. Protect here, but look at that. That's a long distance, guys. So if you want to risk 1% of your NAV on that trade, you're going to have very small. You're going to have a small position size. Then, if you say, okay, wait, oh, this support didn't hold. Good. I'm happy I didn't get in there. I would have got triggered out. Would have got triggered out here. And then after that, price action goes back down here and contracting volume. You have the support area right here, and right here after that, here you could enter. So when the price action starts going back upwards, your sell stop you put below that low, below round number if you want, below the 30-week average, and then after that you write it up. And what could happen here with the relative strength goes down, and when you see it going back up, you know that that's the lull, that's the pullback. If it's on contracting volume, it confirms that was healthy, it was profit taking, no huge dumping. And it's a better place to enter right here than up here. Because up here, there's within 1 to 3 months, usually there's a pullback. You're going to have to suffer through being tempted to have a sell stop too close because you want to increase your risk to reward. Then you'll get mad, and then you won't look at the stock even if it's just a question of timing. That you should have just waited before entering. And then you'll be moving on to another stock. And while this was your stage 2 winner, that would have been... This would have been the bottom, just the beginning, and it would have went to 15, 16, 18, who knows where. So you got to take all that stuff into consideration, guys. And I just want to see, compared to the MJ index, the MJ Alternative Harvest ETF, going back up, still outperforming it. Nice. HMMJ, the other ETF, and really outperforming it. So this one's pretty solid. I did ACB a few days back, and ACB was very strong technically, and this one seems to be as strong, wants to continue. So we got to keep an eye on it. Still some volatility, but hopefully over time this is going to get into just moving up like a ladder. Up, down a little bit, up, down a little bit. Then you move your sell stop below those lows. Protect yourself with the 30-week average, and exit whenever it pulls back lower than your previous low. That means it's time to get out. All right, that's it, guys. Don't forget to subscribe. Only if you like it. Thanks. Ciao. Da, da, da. Do 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 do.